India is on the verge of creating a new tax structure that will transform the way Indians used to pay tax. It will have a profound effect on goods and services. Some things will go up, some things will come down, but the most important thing will be that it will be a kind of an overhauling of India's tax structure which has never been seen before. There will be an unprecedented ceremony in the Central Hall of Parliament on 30th June at midnight when the tax will finally be rolled out, and it will be subject to reviews, it will be subject to refinement, but the net impact will be that it will completely change the way we used to work and pay taxes in the Indian economy. To discuss more about goods and services tax, we have with us today Dr. P.K. Mohanty, former Chief Commissioner, Central Excise and Consultant, Government of India, and currently Co-convener of the Law Committee. We have Mr. Shubham Goyal, a chartered accountant, and we also have Mr. Jaspreet Singh Sukhija, Deputy Director, DRI. Dr. Mohanty, you have been closely associated with the drafting of rules, with the actual envisaging of this tax. Can you tell us what GST is all about and why it is necessary at this point in our economy?
Hitherto, the tax was levied on the manufacture of goods, or on the sale of goods, or on provision of services. Now, like in other countries, the tax we are now going to levy on the supply of goods and services. And it will be levied at every stage of value chain, right from the import till the retail level, with the availability of input tax credit. Presently, it is a fragmented tax structure. The excise duty paid is not available as credit. That is why this will simplify this tax structure, and now there are many kinds of taxes being levied. From the central government side, there are 7 taxes. From the state government side, there are about 8 to 9 taxes. Nearly 16 to 70 taxes are replaced by one tax. And 23 cesses are also being abolished. And as you know, if there are more taxes, there will be more tax laws, rules, regulations, procedures. Tax authorities will be different. A taxpayer has to face, presently he is facing multiple authorities of center and the states. Under GST, he will face only one authority. There will be one interface, but no face-to-face contact between the tax authorities and the taxable persons. Presently, he has to maintain a huge amount of paperwork. As you know, more interface means it causes harassment and inconvenience. Under GST, it will go. For the common man, you want to buy a house, you have to pay service tax and VAT. Go to a movie, you pay entertainment tax as well as service tax. You want to dine in a restaurant, you have to pay service tax and VAT. You would have seen the rates vary from hotel to hotel, restaurant to restaurant. Under GST, this will be replaced by only one tax. And the law we have made, we have mandated in section 33 that the tax amount will be reflected in the invoice. So the consumer will know what amount of tax actually I am paying. So that is the benefit for the common man. The second benefit for the common man is that the tax burden on goods and services are going to decrease. Presently, the tax burden is estimated at 25 to 30%. This is significantly, it will come down under GST. So the common man would benefit. This takes me to the next point. When the prices fall, the consumption increases. When the consumption increases, demand increases. Demand leads to production. Production leads to demand for setting up of more factories. You need more factories to produce goods. You need more business places to provide services. So you need a huge network to distribute goods and services. So it will boost economic activity and create jobs. And it will give a big push to Make in India campaign.
There are some things which are exempt from GST. Also a section of people who do not have to maintain paperwork for GST. Below a certain threshold, traders are not required to produce any paperwork. Their GST will be taken as paid. What are the goods and services which are exempt from GST right now, which may come into the purview of GST later, and these people who don't have to pay any tax at the moment?
We have deliberately made all daily necessities of life are exempt, because as you know, on a middle income family, more than 65% of your expenditure is on food. Let me explain to you in a very simple language. I get up in the morning. What I need? I need a breakfast. So there is no tax on bread, egg and milk. If I can afford, there is no tax on lassi, buttermilk, curd. Or I want to have, I mean South Indian, I want to have a breakfast food made out of atta, besan, suji, maida, dalia. No tax on these items. Go for lunch. What you generally eat? You eat either product made out of wheat or rice. We have kept no tax on rice, wheat, maize, rye, barley, jawar, bajra, ragi.
So food is tax neutral.
Tax neutral. Similarly, pulses, we have not kept any tax on pulses.
Zero tax on food.
No tax on fruits and vegetables, fresh fruits and vegetables. Similarly, nobody can live without reading the newspapers. You would like to know what is happening here. We have not kept any tax on books, newspapers, periodicals, journals, no tax.
So the areas which have not entered the purview of GST are alcohol and petroleum. And traders below a certain threshold are not required to maintain paperwork. Their tax is calculated against the input tax credit which has already been paid downstream. When will these two commodities come under the tax network?
We have deliberately kept the threshold very high because right now the threshold is only 5 lakhs or 10 lakhs under VAT. We have raised the threshold to 20 lakhs. That means it will help the young entrepreneurs who want to start business. It will really help startups. You know, presently we had, of course the figures vary, we have about 93 lakh taxpayers. Out of 93 lakhs, about 54 lakhs payers, you know, they are below the threshold 20 lakhs. That means 58% of the existing taxpayers will be out of tax net, because we really want to help the young entrepreneurs who wants to set up business, you know, so that they don't have to worry about paying taxes up to 20 lakhs. Similarly, we have kept for the small traders, we have a scheme called composition scheme. Under composition scheme, if your aggregate threshold is below 75 lakhs, you can opt for composition scheme, and under the composition scheme you will pay tax as a percentage of your turnover, not every invoice wise. And this tax we have kept at a very low rate, like 2% for manufacturers, 1% for traders and 5% for restaurants. This is the scheme which will benefit the small traders.
Mr. Goyal, you are a chartered accountant. You handle issues of tax on a day-to-day basis. The result of GST will be that some things will go up from a consumer's point of view and some things will come down. Similarly, from a manufacturer's or a trader's point of view, some things will go up and some things will come down. What should we hedge against? What is it that we should prepare for after the GST is rolled out?
After the GST is rolled out, which is expected from 1st of July, we expect there will be some compliances which will help in future as well. Suppose for a manufacturer, we are producing some goods and on that goods we are charging excise duty. Then we have to file excise return. And the same manufacturer, when he is selling the goods to wholesaler or agent and he is charging VAT on that product, so he has to file VAT return. Now the manufacturer has to file only a GST return.
That paperwork comes down. The cost of the good in terms of the reworked GST rates, which are I think in 5 bands, what will go up and what will come down? You were mentioning that 80% of the goods, the cost will not change in terms of tax.
Yes, either 80 or 81% of the goods are below 18% rate. So there should not be a huge impact on inflation after GST will roll out. So I think GST will reduce the prices of the goods. But in case of services, some of the services like telephone services or banking services goes up, as the current service rate is 15%,
and it will
now
go up to
yes, it
18.
is 18%.
What are the practical problems that you anticipate in the GST rollout from the point of view of traders when they file tax? Because there will still be a state GST and a central GST. There will be 2 sets of demands from 2 sets of taxation authorities.
No, there will be no 2 set of taxation authority. Either central government will be the tax authority or state government will be the tax authority. This depend on the turnover which they have done in previous year. Either state government will scrutinize the assessee or is central government will scrutinize the assessee.
Mr. Sukhija, you are in charge of that branch of government which actually collects the tax. It collects revenue, it collects tax, and it is more than familiar with the ways in which tax is evaded. We have seen that GST will replace many other taxes where there was a significant leakage because at a toll booth, say, or at some other point of interaction, there was an arrangement that people who were moving goods and services would reach with officials, and that would lead to basically corruption and leakage. GST seeks to replace this. What are your comments about how GST is going to improve compliance and increase revenue?
The way GST has been planned, it focuses a lot more on automation. With increased automation, human interaction will come down. As human interaction comes down, so the interface between the taxpayer and the tax collector will be through an IT machine. We are putting in a huge IT setup in the form of GST network through which a person has to file returns. Even the demands will be issued over the GST network. So interface is going to be minimum. Secondly, the compliance is going to increase because now a taxpayer has a lot more incentive to be in the tax chain rather than to be out of tax chain.
There are many manufacturers who are saying that we are ready to pay GST and we will pay GST, but many of our vendors are not ready in terms of their income, of their tax availability or their IT connections or their back end. They are not ready for GST, so we will still be paying them cash, and we will not be given an invoice, and we will enter into unorthodox arrangements with them.
Well, I think it's a misconception that is in place. As I already said, the incentive to be part of tax chain is much more than to be out of it, because a person who is part of the tax chain, the goods manufactured by that person or services provided by that person or the trading done by that person, the cost for him is going to come down if he's part of GST chain. If I am a consumer of something, either services or goods, I'll go to a manufacturer or a trader or a service provider who's providing me goods at a lower rate. And certainly a person, or I would say a taxpayer who's part of the tax chain, will be able to provide goods at a much lower rate because of the inherent tax structure that GST brings in and the inherent benefits that GST brings in, which in other words is doing away with cascading of taxes.
Dr. Mohanty, if we just come to the cascading of taxes issue, certainly there will be a rationalization of taxation, and therefore taxes on some goods will definitely come down. And it will be a strange situation because while taxes come down, the government's revenue is expected to go up over a period of time also. We have not seen this happen, but we are expecting that to happen now. But in some services, the taxes will go up. For instance, in insurance payments, the taxes will now be 18%, whereas earlier it was 15%. In telecom services, the tax component will go up. How are we going to ensure, number one, that the consumer, especially the very poor consumer, for whom even 100 rupees in a mobile bill matters a lot, how are we going to ensure that this tax change is accurately reflected in the cost that the consumer entails?
I can assure you the prices are not going to go up, because while fixing the rates, we are concerned about 2-3 things. One is that it has to be revenue neutral, it has to be inflation neutral, and it should not adversely affect the common man. These are the guiding principles, and we have gone by the principle of equivalence. What is the present level of tax and what is the level of tax we are going to propose? If you see 81% of the tariff lines, the tax rate is 18% or below. Say for example, madam, all daily necessities I gave you, still you can get a broad view of what I am telling you. All daily necessities of life, like your tea, coffee, spices, edible oils, sugar, LPG, life-saving medicines, coal, we have taken care to see that rate is only 5%. Your point that, in some cases, that is telecom or insurance services, the prices should go.
Mutual fund payments,
it may not happen
services.
because, madam, these suppliers of services, they will be eligible for input tax credit. and we have kept a provision in the law, section 171 of the Act, that the benefit of input tax credit and the benefit of tax reduction have to be passed on to the consumers, to the customers, recipients by the suppliers. And we are going to set up a anti-profiteering authority which will monitor this thing and will ensure that the price reduction, input reduction, benefit of tax reduction passes on to the customers. So I have no doubt about that, prices will not increase. In fact, Revenue Secretary has already said that the inflation will be down by 2 percentage points. That is our expectation.
Mr. Goyal, despite all this and despite Dr. Mohanty's heartfelt and very fervent assurance, as a consumer, we know that very rarely do prices ever come down. Mostly they go up. Now, as a chartered accountant, where do you see costs coming down and where do you see costs going up?
For a cost, 81% we already discussed, we are expecting the price will reduce, and the remaining 19%, or we can say 20% goods, those prices are increasing. So basically those goods belongs to the luxury class. So I also expect there will be no increase in the prices of basic necessities. Even the prices of basic necessities will go down.
You're expecting them to go down?
Yes.
Mr. Sukhija, over a period of time, the government will gain tax. Its revenue will go up. Is there any figure how much the revenue will go up, how much this will impact growth? Because we all know that increased revenue means the government only handles the revenue. It's a trustee for the taxes that we pay. It can use that money to build more roads, to create more hospitals, to build more government schools, and ultimately it's for the benefit of ordinary common people. So it's very important to know how much the government will benefit or how much revenue the government will get because of GST.
The GST rates, as Mr. Mohanty has rightly pointed out, as of now has been fixed at revenue neutral rate, where the government's revenue does not suffer and there is no impact on inflation per se. However, it is expected that with the rolling in of GST, the compliance is going to increase. And as and when the compliance increases, it's a slow process, but it definitely is an incremental process, and as and when compliance starts increasing, the government's revenue will go up, and I'm pretty sure that over a period of time, even the rates of GST will be moderated. Exact amount, how much the revenues will go up, I will not be able to comment on that. However, there have been studies, and in fact, one of the committees set up by the government even estimated that India's GDP will grow by about 2% with the rolling in of GST.
This is what the Chief Economic Advisor has also said.
Yes, and the primary reason, as Mr. Mohanty has pointed out, that GST will lead to more demand in the economy. More demand will lead to more investment in the economy. More investment means more productivity. And what is GDP? It's basically productivity of the economy. And as and when the productivity increases, your GDP increases. And GDP increases, obviously the revenue mop-up will also increase. When the revenue mop-up increases, government will be able to undertake much more welfare measures. And one of the biggest benefits of GST is doing away with the state borders. So we are having one market, one national market. This will incentivize foreign investment. Foreign investors will come in because there are no tax barriers. There is no differentiation, artificial differentiation of the rates. So all the decisions of the investor will be based on pure economic principles. They will not be artificially driven by the tax rates. So when an investor invests based on pure economic decision, the productivity increases. So there are multifarious benefits that we are looking at.
Right now, you mentioned compliance. Right now, where is the point where the leakage is maximum and which the GST will be able to control? On the state borders, or would it be on excise? Would it be on issues of under-invoicing, over-invoicing?
Well, tax leakage is in every transaction, I would say. We cannot singly point out that this is the point where the tax leakage is happening. It is happening right from the stage of procurement to manufacture to trading and to final consumption. As a consumer, what is the culture that we have? In India, we do not have a bill culture. Whenever a consumer goes to a ration shop and wants to purchase something, ration shop owner says that if you take the bill, you'll have to pay this much tax. So it's happening at the consumer's end also, at the producer's end. He'll say that I would rather not, give a bill and send my goods like this. So this is at every point. There is no single point where tax leakage is not happening. This is going to stop in GST because of two things, as I already said. One, automation, less human interface, and second, incentivization to be in part of tax chain.
And automation implies how do you automate a truck moving from one state to another state? How do you monitor that?
There are no border controls now, so don't need to monitor per se that truck moving, but as soon as the invoice is issued, it has to be captured in the IT system. So when an invoice is issued, it moves from one place or one assessee to another person. That invoice, the person will be able to take benefit of GST only when the invoice reaches that person. If the invoice does not reach that person, the recipient or receiver of the goods or services will not be able to take benefit of GST. So he or she, the person will demand an invoice. This will inculcate bill culture also in our economy.
Dr. Mohanty, the centre was sensitive to concerns of the state government, which some state governments which actually stand to lose a lot by way of revenue because of GST. So they have agreed that a certain amount of compensation will be paid to state governments, particularly those state governments which have high levels of manufacturing industry and therefore stand to lose. Can you explain to us what the arrangement is? Because this will lead to more compliance because state governments will be incentivized to make sure that GST is rolled out properly.
It is a win-win situation for both center and the states. It is because of three things. One is because of widening of the tax base. Secondly, because of increase in trade volumes. Thirdly, because of improved compliance. As my friend explained, how the compliance will increase, everybody will gain. How compliance will increase? Under GST, there is no incentive to evade taxes. It is a tax on value addition. Because right now, if I evade taxes, I evade the entire tax. Now in a company, in a chain, if I evade taxes, then I will lose my input tax credit. There will be no taker for my product. So there is an incentive to prepare invoices. More importantly, what we have put in place, what we call interlocking system of incentives. Interlocking system of incentive is my tax compliance, my refund, my input tax credit depends upon your good behavior. I cannot take input tax credit if you have not filed your returns. Suppose I want to reduce my tax liability. I cannot reduce my tax liability unless he reduces his input tax credit. So my behavior will affect either the customer or the vendor. So it is a chain. So there is the inbuilt incentive to comply. It is like somebody said, it is like Grameen Bank's system of lending. You know, these banks give loans without any collaterals. But if there is one default, the entire community is blacklisted. So similarly under GST, nobody can escape because it is a chain. That is how your compliance will go up. And more importantly, because of what he explained, automation. I will just elaborate. Now under GST, say for example, starting with the registration. If registration is not granted within 3 days, then it shall be deemed that registration has been granted. Assessment, it is self-assessment. I will assess my tax and pay taxes online. Filing of various returns, inward supplies, outward supplies, then monthly returns, quarterly returns, final returns, annual returns, everything is automatic online. Invoice matching also, it is online. Maintenance of records also, you can maintain electronic records. Refund will be automatically credited to your bank account. So there is no face-to-face. So this reduces the transaction cost of doing business. And your question, how the states will be, because I don't expect that any state will lose out in the process. But we have made a provision, if there is a loss to any state, then the central government will give compensation to that state for a period of 5 years.
Mr. Goyal, what is the impact that contractors will have on the services that they provide? Because contractors provide a variety of goods and services. They sometimes call themselves consultant, they sometimes call themselves providers, service providers, etc. Is there a way in which the contractors' contribution to the economy is going to be measured?
For a contractor, the similar law which is already in VAT, GST Council had considered the similar law. There are no changes for contractor as well. Whatever services they are taking, they can take a input tax credit from that services, whether it's a purchase of goods, gathering the service from a professional or expert.
Okay, so I am going to go around the table now and ask you what is the biggest fear you have on GST, each of you. What is the biggest fear and why we should not be afraid? So, Dr. Mohanty, why should we not be afraid of GST?
For the first time, madam, in history, the whole country will be one. Removal of your octroi check post will transform India into a single market with a population greater than United States, Europe, Brazil, Mexico, Japan put together. It will unify $2 trillion economy, Indian economy, and 1.3 billion population into a single market. Now goods produced in one part of the country will be marketed the farthest end without it is a seamless movement, free flow of goods and services. Why one should be afraid?
Mr. Goyal, what are you most afraid of when GST is rolled out?
See, whatever query I am receiving from my client, what I analyze, they are fearing change. Like from one authority, we are moving to another authority. Some compliances are different from existing law. So we can say, as we have already did this transition period, when the VAT has come, there will be no impact when we have moved from sale tax to VAT. So in that case also, in GST, we will easily move, we will easily integrate from existing law to GST.
Mr. Sukhija, what should we be afraid of from the point of view of a higher cost economy, from the point of view of unanticipated tax demands? Should we be afraid?
We should not be afraid of these things at all. We are not going to be high cost economy. Rather, we will be a lower cost economy post GST.
I say this because
the benefits
GST
will trickle down. They may take time trickling down. That's a separate issue altogether. But benefits will definitely trickle down. What I think where the fear ensues mostly in the trade is because of misinformation or lack of information. Nothing more than that. Yes, there is some misguidance, right? But government is doing its level best to allay the fears, and lot of training sessions are being held. Capacity building is being done both at the level of government officials and even at the industry level. These kind of fears are being slowly allayed, and I'm very sure once the GST is rolled in, all the fears are going to evaporate.
With the parenthetical note that no country in the world where GST has been rolled out, the government has ever come back to power, I am absolutely sure that the goods and services tax regime is going to herald a totally new dawn for the Indian economy, for the way India does business, for the way India pays its taxes, and it is going to be a more compassionate, a better and a more efficient way for the government for collecting revenue. Thank you so much, all of you, for coming here and giving us absolutely invaluable information on the goods and services tax.